I have with me today our CEO, Mr. Mohammed Al-Shamasi, who will walk us through our strategy. Also with us today, our CFO, Mr. Bilal Bouchnak, who will provide deeper insights into our financial performance and guidance. After which, we will open the floor to your questions. Before we start, I would like to thank HSBC for hosting this call. With that, I hand it over to our CEO. Mohammed, over to you, please.
Thank you, Rida, for making the introduction. Thanks, HSBC team, for arranging for this call. It's a very exciting moment for Derayah to be doing this first investor call since becoming a public company. We are very excited to share with you the latest news and progress that we have achieved in the company. To start with, we'll touch point with the update on the IPO and what we have achieved. Alhamdulillah, the IPO has been very well perceived by the investors community. A very strong demand of more than 162x oversubscription of the book by institutional investors. Derayah, an investment company, which is one of the larger conglomerates in Saudi Arabia, took also a cornerstone position in the offering. From a retail perspective, around 600,000 investors have participated in the IPO, and also this has been a massive success with around 15x subscription of the book. Moving from the IPO, I'm just providing you with a quick update on where we are from the last time we have spoken. I'm sure a lot of you participated in a number of discussion we had running up to the IPO, like the early look, the deep dives, and probably the roadshow itself during the IPO. From that moment, we continue really to progress very well in the business, achieving new highs for the organization with assets under custody surpassing the 30 billion riyals mark. Our assets under management continue really to increase. We closed 2023 around 10 billion. We closed 2024 with around 17 billion. This is a massive 70% growth of our business. Our customer base also have increased substantially over the year, increasing by more than 100,000 to cross the mark of 500,000 customers, all of which has been acquired through the digital channels. Our financial data, alhamdulillah, this year has been a very solid year. In the first time of our history, we achieved more than 877 million of revenues and net income of around 444 million. We continue really our growth trajectory of CAGR of more than 44%. More than 65% of this profit has been distributed to the investors in the form of dividends. And alhamdulillah, we continue to achieve one of the highest return on average equity in the market with around 50+%. Next. The company continued its growth trajectory with customers, more than 35% CAGR of growth. We have achieved a major milestone of delivering more than 500,000 customers by end of last year, and we continue to see some good signs of a new customers intake as we speak. The company has now really been busier than 2024, where we are carrying number of portfolios, number of projects in our portfolio, and also doing an IPO in the same year. We'll come on and provide more insights about what we have achieved in 2024 going up to 2025. Next. In this presentation, we'll talk about number of areas, the key enablers for the business, how are we making money and monetizing this, how are we creating value for our shareholders, and we'll end this presentation with where we see the market and where we are putting our time and energy. Next. Just to provide you with a quick summary of our business, Derayah operates in two main activities, brokerage and asset management. Within the brokerage side of the business, we operate in 43 markets, offering a complete solution for investors. looking to trade equities, fixed income, ETFs, as well as different types of derivatives. We offer this through digital platform. We offer this through the application, and most recently also we have started an institutional trading desk. We offer margin lending across the markets in the local side and the international side as well. Within the asset management side of the business, we operate in a comprehensive solution and a diverse risk-reward profiles, ranging from a low-risk money market base all the way to private equity and venture capital. In the public side, we offer equities, DPMs, fixed income, cash management solutions, and private credit, real estate, and venture capital in the private side. One of the very early products that the company have launched was the fund supermarket back in 2009, and we continue really to invest in that, and we'll talk about the new initiatives that we are doing also within the wealth management. What really excites us is really to stay ahead of the game, is really to stay ahead of the competition, and why people would come to Derayah, because we ensure that we invest in the technology, we invest in our digital presence, so very swift onboarding process, very slick application, instant cash transfer between different markets and different asset classes. And our app has been always rated as one of the best apps in the market. Next. Over the years, we continue really to invest in a new area. So we started back in 2009 with cash equities in Saudi Arabia. Then this was followed by a margin lending activity. And we continue really to build more and more products and services over the years. In most recent times, we started really a number of new key projects, like launching of an institutional desk. We hired a team of institutional traders and looking now to build the institutional capability for servicing people like you attending this call and provide you with the trading services that you need. We have also, building on the success of our share lending and borrowing program in the US market, we are launching our own version of SPL in Saudi Arabia. This is in a very final testing phases, and we expect really this to be launched fairly soon. The relaunching of Derayah Smart, a robo-advisory platform that we have created a couple of years ago. We are relaunching this and adding new features of that. Ending the project's portfolio with a launching of algorithmic trading. We see a more algorithmic players coming to the local market, and we would like really to be one of the key players in that side of the business as well. Next. To provide you with a focused approach on the brokerage and what we are doing. So within the institutional trading, we started to see a few years ago that the market has really changed, and more institutional investors are coming to the market and playing a bigger role on the liquidity of the market. We decided to put some team together. We hired a few team members really to focus primarily on building our institutional capability. We expect really this to help in our market positioning and drive further liquidity and further profitability for the business. Securities lending, post the Dawel implementing the BTTP program 2 years ago, this really opened the new opportunities or new avenues for growth within the brokerage market. So building on the success and a deep understanding of the securities lending and borrowing in the US that we have been doing for the past couple of years, we think this is the right moment for us also to introduce securities borrowing and lending in Saudi Arabia, capitalizing in the new framework offered by Tadawul. We're already in a very advanced stage of this. We started this project late last year, and we started actually testing the system now with a few trades, and we expect really in the second quarter of this year to go live with this platform. Within the algorithmic trading side of the business, building on the institutional change of trading, most recently, the recent wave was really the introduction of more algo players and more market makers coming to the market. The latest data we heard from Tadawul that they represent around 20 to 25% of the daily trading volume in Saudi stock market. Building also on Derayah's deep rooted knowledge of technology and deeply rooted understanding of connectivity with the exchange. We have leased a space last year within the exchange, and we moved certain servers to be very close to the exchange servers and enable us to offer algorithmic trading to our customers. We expect really this to be a project to be delivered toward the end of Q2 of this year, and we're already quite advanced within that project. Next. D360 Bank, we incubated the bank back in 2018 when it was just a new idea. We hired and we assembled a team of professionals that really helped in building the first phase of the bank, securing the license from the central bank, and syndicating the required capital from investors, including the PIF as a shareholder within the bank. The bank secured its central bank license in 22, and by the time we were announcing our IPO in December 24, also we heard some positive news from the regulator that the bank can become fully operational and have secured the full operating license. One of the most successful launches of a fintech in Saudi Arabia, in a span of less than 3 months, the bank was able to ramp up more than 800,000 customers. To me, this is really an amazing work that the bank have done. Following the success of global players like Nubank or Monzo, they have also managed to launch the bank very successfully and attract a significant number of customers. We are at the investment stage of this bank, and we continue to burn money until the bank basically comes more in the profit making and launching new products and services. To mention a few products and services, the bank currently is focused on retail investors, and the next phase will do more on the SME side. Currently, they do payments and deposits, and they are testing now new lending products, and this is really what makes banking exciting when you basically go into the lending territory. The most important thing for investors within Derayah here is the cross-selling opportunities that D360 is offering to the investors here. So we are working with them to offer banking products to Derayah's clients and offer investment products to the bank clients. So we are looking to launch like the Derayah credit card, offering the robo-advisory platform to the bank's clients, and making also the fund supermarket available for the bank clients. Next. Derayah continue really to capitalize on the opportunities in the market. We are in a market characterized by expanding population, characterized by youth coming to the investment world and started really saving at early stage of their career. We believe that we are ideally positioned to capitalize on that. We have a complete product offering. We have a complete set of applications that customers can benefit from. This is complemented by the banking products that we are working on now with our colleagues at Bank D360. So we believe we are ideally positioned to take advantage of all of these opportunities available in the market. I'll take a pause here and I'll give the floor to my colleague Bilal to walk you through monetization and how are we planning to make money out of these opportunities. Bilal?
Thank you, Mohammed, and thank you, HSBC team, and thank you for all those who's attending the call for giving us the chance to share our success with you, to share how was all of these milestones achieved, transformed into a successful financial and solid performance of Derayah in 2024. Next slide, please. In this slide, we will be sharing the consistent growth in the assets under custody and the assets under management. On the assets under custody, which represents the cash and the inventory of stocks that Derayah has provided from its clients, we have reached to 30 billion in 2024. with a growth of 19% compared to 2023, and with a CAGR of 20% since 2020. And this shows and proves the quality of services that Derayah is providing to its clients. And considering, or despite of the competition that is facing within the market, Derayah is able to continue to grow within the asset under custody, and that is supported or fueled by the new cash, or the new investors, and new cash and assets coming from the investors, with the appreciation of the existing value for the old investors. On the assets under management, and Derayah has shown a great success by achieving a 66% growth compared to 2023, reaching to 17 billion and achieving a growth of 32 CAGR, which is much higher than the benchmark of the market, which was around 14% or reached to 20%. And during the previous period, Derayah was able to outperform the market and achieve a CAGR of 32%, reaching to 17 billion. That being said, we still believe that one of the highest potential growth for Derayah on the assets under management, since we believe that we are still at a lower pace and there is a huge opportunity growth in that mainstream. Next slide, please. In this slide, we'll be sharing the diversified revenue that Derayah was able to achieve and to generate throughout the previous period. So from evolution from the brokerage to, in 2020, that was the main player to achieve, to have the special commission and the assets under management. All of these has enabled Derayah to achieve the highest operating income since inception, which is almost 870 million, with a 41% growth compared to the previous year, which was as well was high. And we believe that that will be the new challenge for Derayah, how to continue the same growth and how to continue what has been proven in the previous period. So we believe that this is the new start for Derayah, and that number will be increasing going forward, inshallah. Next slide, please. And this slide will drive you into the deep dive of the brokerage revenue. For who attends our ELP and deep dive and road shows, understand that the revenue generated in the brokerage from Derayah comes mainly from two streams. The non-margin trading, which represent the non-margin trading in the local and the international market, and the margin trading. And the non-margin trading, Derayah has achieved 460 million in 2026. Despite the discount that Derayah was providing, the competition that Derayah was achieving, Derayah has achieved a growth in the net margin generated from the trading value by reaching to 13 bips. That was mainly supported by the renegotiated cost structure Derayah has implemented since 2022, which enabled us to face the competition, provide the highest discount, and still continue a high level of or double digit of growth on the non-margin revenue. However, in the margin revenue, and just to give you a hint about how Derayah managed the margin in Derayah is provided by a fund. It's called Trading Finance Fund. That fund is mainly an off-balance sheet fund, and that fund provide margin to the clients. How the investors in the funds place their deposits, and Derayah uses this money to provide margin. The margin generated from, or the revenue generated from the margin borrowers, is shared between Derayah and the investors. The investors earn SAIBOR plus 2%. And since the SAIBOR was increasing and reached to the highest level in 2023, that's why we can see that the net margin earned by Derayah declined in 1.7. However, that with the expectation for the interest rate to start moving down, we expect this will be reflected positively on the margin revenue going forward. And in this case, just I want to refer to the fact how Derayah is always able to take advantage of what's happening in the market. When the interest rate declined and there was a negative impact on the margin business, there was a positive impact on the special commission, which we'll be talking about in the forward in the coming slide. However, what I want to pass here, that Derayah is always able to take advantage of whatever opportunities available in the market to make sure that the best value is created for its investors. Next slide, please. In the assets under management, Derayah has achieved an exceptional performance in exceptional growth. in 2023 by achieving a growth of 66% in the assets under management and 78% in the revenue generated. And in this slide, and this growth did not come only from the revenue generated, did not come only from the increase in the assets. That was combined with an increase in the net margin generated, reaching to 105 pips. This was as a result of the management fees, which is an average of 70 bips, in addition to the big subscription that came from the investors in our funds. As you can see, that as previously provided to you, the assets under management increased from 10 billion in 2023, reached to 17 billion in 2024. And that as well was supported by the performance that was achieved from our asset management team, which represents almost 19 million. Therefore, the overall margin has reached 105. Next slide, please. In this slide, we'll go into the deep dive of the special commission generated by Derayah. The special commission generated by Derayah comprises of two main factors: the revenue generated from the cash that provided by the clients, what we call it the omnibus, and alhamdulillah, we were able to generate a very high return on or very high murabaha on that cash, which has contributed to the revenue of Derayah and enabled Derayah to reach the highest revenue since inception. And in 2023, Derayah added another factor to the special commission, which is the share borrowing and lending of the international market. And that's why we can see that the revenue has increased by 50% year over year, mainly as a contribution of the increase in the cash balance of the clients, the increase in the omnibus of the client, the interest rates, the high interest rates, which helped Derayah to achieve this number, and the implementation of the share borrowing and lending program for the international shares. Next slide, please. And now we'll be showing you the sustainable long-term value that Derayah was able to create for its investors, and we believe this value creation will continue going forward. In this slide, we'll be showing you how Derayah compared to 2023, the revenue or the reasons of the growth that has happened. Derayah, and we'll show, as we show on the left side, on the lower upper side, the operating profit generated by Derayah alone. Derayah in 2023 and 2024 reached to the highest net operating profit since inception, which is 518,000, achieving a 41 growth compared to 2023. That mainly was a result of the contribution of the increase of all revenue stream, whether from the brokerage, asset under management, and special commission. That was not only an increase, that was supported with an efficient management of the expenses, which enabled Derayah to generate an net income margin, which is considered almost the highest in the industry of 51%. On the right side of the slide, we see how the operating profit of Derayah achieved for 518 million. And in this slide, I want to show that I want to pass that the value of Derayah mainly is comprises of two factors, which is our performance and our operating income generated by our main revenue streams, which are the brokerage, asset management, and special commission, in addition to our share that we achieve, our share of our investment in D360. And as Abu Abdullah referred earlier, we believe that the value of the bank will grow and will continue to grow with the exceptional milestone that has achieved so far. However, and that being said, as you know, in the growth phase or the early stages, the bank will generate some losses, and that's why we have to book our share of the losses in 2024, which was 72 million, and that generated the net impact or the net revenue for our investors of 444 million. That being said, the 400 million, which considered the highest net income of Derayah since inception. Next slide, please. With a decent management and efficient control of our expenses, Derayah was able to achieve the cost-to-income ratio of 40% and enabled to Derayah to achieve, which is will be showing in the next slide, the highest return on equity for its investors. Next slide, please, Rida. The highest return on average equity for its investors with a 50%. And since the vast majority of our revenue is cash, and as you know, despite that, we continue to invest in the platforms, in the IT infrastructure, and we continue to increase our investment in the prop book. Derayah was able and will continue, inshallah, to be able to pay a generous dividend for its investors, which has reached to 65% in 2024, and we expect it to be above 60% going forward. Next slide, please. To summarize our expectation, and for those who did not attend the deep dive and the road shows, we will be sharing our expectation for the medium-term growth for Derayah in all revenue streams. For the brokerage, we expect to achieve 7 to 8% CAGR going forward, and the asset management, which is 20 to 24%. Although Derayah has achieved above 30%, but we want it to be a little bit, like we say, conservative. We believe that this ratio is conservative, and our internal target is much higher than this number. And the revenue growth on the special commission, we expect to achieve a CAGR of 7 to 8%. The reason for the conservative anticipation for the growth in this specific stream is the expectation that the interest rate will decline as we go down, in the coming years. That's being said, this is being hedged by the margin revenue. So any decline in the interest rate, although it will affect the special commission in a negative way, however, it will impact the revenue generated from margin in a positive way. On the cost to income ratio, we expect to reach to 38% going forward. We are planning to sustain the same level of return on equity, which is above 40 to 50%, with a dividend payout ratio above 60% going forward. Back to you, Abu Abdallah.
Thank you, Bilal. And thanks for your patience. For dear audiences, we'll a few slides and we'll close this and open the Q&A. Next, please. The market overall is still showing some positive signs of growth. So the trading volume is still expected really to pick up. The recent decline in liquidity, we believe this is due to seasonal factors. Our scenarios are building on a growth on the trading volume, supported by the number of listings, the number of new initiatives like short listing, share lending, advancements on market making and algo trading. All of these will contribute to positive momentum within the trading value and trading volumes in the market. The asset management market also continue to show very strong signs of growth. Historically, the market grew at a CAGR of around 23% from year 2020 until 2024. We are anticipating this trajectory to continue, albeit at a slower pace of around 15%. The aspirations we have in Derayah is really to outperform this growth rate significantly and deliver a much higher value and a much more asset under management growth within our business. Where we are putting our time, energy, and effort, we will continue to maintain our prominence within the brokerage business. And what we mean by this is by refining and diversifying our product offering. We ask ourselves this question a lot: how to stay relevant for our customers, how to stay on top of our game when it comes to our customers, and customers will grow and maintain their relationship with Derayah. Simply is really to offer them the highest possible value at the lowest possible price, and we continue really to reiterate and revise this at all times. Our asset under management, we continue really to expand in this side of the business by acquiring more talents, hiring resources, and building more track record. We recently made an exit also within our private equity. It was listed just a day before the listing of Derayah, called Ratio. And we continue to look for new opportunities within the private space, as well as continue to build our asset management in the public space. The digital wealth management is part of our DNA. This is one of the very early products that we have started the company many years ago, and we continue to see a lot of opportunities for growth within that side of the business. I mentioned earlier in the presentation, we are relaunching some of these products and services in this quarter, like the fund supermarket and the robo-advisory platform, and we'll continue to invest in new ideas and serving new personas in the market. With this, I will end the management presentation. I'll give the floor for Q&A.
Thank you, Muhammad, and thank you, Bilal. Walid, we can open the Q&A session now, please.
Of course. Thank you
very much.
so much to Derayah Management for the detailed walkthrough. Ladies and gentlemen, you have obviously two options where you can raise your hand or use the chat box to ask question. We have Michael, sorry if I pronounced it incorrectly, Michel Sayed, please go ahead.
Hello, good afternoon, everyone. It's Michel Said from Franklin Templeton. Am I audible?
Yes, you are.
Thank you, guys. Congratulations on this very strong set and strong debut on Tadawul. I have a question regarding the market in Saudi. You just referred to the recent decline in liquidities. What's your expectation for the rest of the year when it comes to volume traded in Saudi? This is my first question. And the second is the same, but more on the international front. We're seeing a lot of volatility in international markets. How would this play for you? Would this be on the more positive side, given that we're trading here derivatives, or how would this and the other locally will impact your revenue on the brokerage for 2025? Thank you so much.
So let me start with addressing the liquidity. We think the recent liquidity, I think, is a number of factors really driving this. Ramadan, end of Ramadan, I think, is a big factor on this. Also, the geopolitical situation, plus the trade war that was instigated a few weeks ago. We think all of this really giving uncomfortable position for equity trading overall globally. I think what Derayah is more keen on, and we have seen this trend actually happening repeatedly, and I'll give a couple of examples. Early 2024, we have seen a very heated trading volumes in the local market, and it was very muted, I would say, in the international side of the business. Toward end of last year, we started to see a reverse of that. When Trump was elected, we started to see a lot of activity in the international side, and we saw a muted activity within the local market. So the beauty here is we are not playing one market versus the other. We are a platform that offers investors the exposure and enable them to trade both sides. They can mobilize their purchasing power and their assets from the local side, international, or from the international into the local side. And we see this happening on a daily basis. Every day in the early hours of the day, we see a movement from the international side to the local, and toward the end of the day in Saudi trading hours, we see the purchasing power are moving to international markets. So we are a delta of what's happening globally. We are not bounded by what's happening in the local market.
Thank you so much. So there's no clear direction from the interest of the retail on local versus international. That trade both ways. There's no migration from local to international or vice versa.
We benefit from it either way.
Okay, thank you so much.
Whatever it rains, it will pour in our pockets.
Yeah, understood. Thank you.
We have Amer Farouk. Please go ahead.
Omar or Omer? Go ahead.
Maybe he's on mute.
You need to unmute yourself, please. Okay, Walid, maybe we can take.
Yeah, we'll take a couple of questions from the chat. We have Yasser asking, for your institutional trading desk, what's the differentiated offering versus what's available in the market?
Thanks, Yasser, for your question. The main differentiating factor that Derayah offers is its deep understanding of technology and deep connectivity to different markets. So technology, as we have repeatedly mentioned, is a core competency within our company, and we believe that Derayah is at excellent position to capitalize on the best connectivity, best APIs available for institutional investors to benefit from. Coupling this with a deep understanding, and we have hired a number of team members that have a deep understanding of financial markets and can bring solutions to our customers. Next question.
We have Jabir asking about D360 losses were higher in Q4 compared to previous quarters. Is there any reason for this? Should we expect similar level of losses in 2025?
I'll mention just a couple of words before I hand this to Bilal to answer. Any company in its early stages of build-up has to go through what they call a J curve. So, and in the initial years and the build-up years and the investment years, you continue to build the capabilities, build the system, hire people, spend a lot of money in marketing, develop a good market entry strategy, which require you to spend a lot of money while your revenue still not catching up with all of that spending. So the bank is in a very early years of its operation. It just started operating fully a few months ago. But the receipt of the market, 800,000 customers signed up for the bank within a span of less than 3 months. This is something unprecedented we haven't really seen in our career in Saudi Arabia. About the losses, I'll give it to Bilal to comment on that.
Okay, thank you, Abu Abdullah. And before speaking about the losses, and in addition to what Abu Abdullah said, the bank just has been into the pre-operating phase since 2018, reaching to today when they have received the right to start offering services to its clients. So even though going forward, still they cannot offer a full product or a full banking product to their clients. Therefore, yes, they have generated losses. Yes, we expect that to continue in 2025. And according to the original plans, which this is of course subject to change with the market action and how the clients will perceive the D360. This is going to continue until the mid of 2026. What's the level of the losses? Will it be the same or higher? No one can guarantee how things will go on. But however, if the banks continue expanding, we expect the same level, maybe a little bit less or than the current losses, or a little bit more. Now, when it's expected to start generating positive impacts on the bottom line, we expect this to happen in the second half of 2026. However, and that's being said, as I referred in the value creation and in the performance of Derayah, that the value of Derayah is mainly comes from its core operational business. However, the value of Derayah from the investment part come as a percentage of the over value of D360, which we expect using the global peers. An example, it gives the expectation of where the bank is expected to reach as an overall value in the near future.
Thank you, Bilal. We have a couple of more questions from the chat box. Someone is asking, what's the percentage of institutional versus individual customers, and what's the percentage of domestic versus international customers?
We are predominantly an individual platform, very limited exposure to institutional. I don't think we have exceeded more than 10% of the institutional pocket. We don't have any international customers. It's all domestic customers.
Thank you. And Omer is asking on the chat regarding these 360, what sort of burn rate losses should we expect in 2025, 2026, and when do you expect it to break even?
On the break even, as I referred earlier, we expect it to break even within the mid second half of 2026, according to the original plan. The first question, the burning rate, we expect it to continue. As you know, the bank has started an aggressive marketing campaign. As you know, it's a client acquisition phase in 2025 and 2026. There's an aggressive growth plans for the bank. So the bank will continue to spend on expansion, on attracting, on acquiring clients. Therefore, we expect the same or slightly higher as an expectation, higher burning rate than 2024.
There's a couple of more questions on D360. Can you give us a sense of D360's retention and user metrics? How has the traction been? Does it have a consumer lending license?
I think it's very early to give indication on the retention. The bank just started operation 3 months ago. I don't think that's even statistically possible to calculate that. The bank already received a full license. The way it operates in Saudi Arabia, that you have to secure the central bank approval for each and every product. It's not a new license. The bank is already licensed to do a complete banking operations, both sides of the balance sheet. But they need to receive the approval on the product level, which the bank, as I mentioned during the presentation, already started testing for a lending product, consumer lending product, and they expect to receive the final approval fairly soon.
Another question from Yasser asking, what products retail consumer utilize in international markets, which can become volume generating for you if launched in KSA?
We mentioned in the presentation, building on the success of share lending program that we have launched in the international side of the business a couple of years ago. We are now replicating the same experience here in the local market, and we are at an advanced stage of testing this product.
We have another question from Umair asking, what is the churn rate for brokerage and asset management business?
Bilal, do you have that data? I don't have it on top of my head. We can refer back to you at a later stage. I don't have this on top.
I don't have it. No, on the top. On the asset management, I have it. On the brokerage, no. On the asset management, it's less than 10%. On the brokerage, I don't have it.
We have a question asking, what is your view on open banking regulations in Saudi? It seems D360's ability to win customers from incumbents will become easier since customers will be able to switch more easily than before.
We believe overall changes happening within the banking is very positive and really fits perfectly with our strategy. So we were one of the very early players to adopt open investment platform back in 2009 by creating the fund supermarket. Also within the trading side of the business, we have implemented back in 2017, 2018, one of the first external API connectivity, enabling our customers to benefit from other applications to gain access to different financial markets. And we are now also in discussion with a number of fintechs to benefit from the infrastructure that Derayah has built over the years to capitalize on that. With a similar pattern, we think that our colleagues at Bank D360 will benefit from all of these advancements happening with an open platform or even within the fintech space overall.
We have a question from Rahul. Please go ahead.
Hi, thank you for the opportunity. I'm home. I'm audible.
Yes.
Perfect. A couple of questions from my end, more just to understand the nature of retail customers in Saudi. So are they more high churn customers? Do they buy and sell often trading types, or are they a buy and hold sort of investors who typically look for the dividend yield? Basically, what are the factors, which will drive retail volume, trading volume in Saudi? That's number one. Second question is from a derivative side of things. Any specific reason which you think as a broker, derivatives volume hasn't really picked up in Saudi, especially among retail customers? Because when you compare with global markets, last 2 years has been pretty strong globally across exchanges for derivatives trading volume among retail. Thank you.
On the retail side of the market, I think we are talking here about a very diverse pool of customers. The market has more than 6 million portfolios in the exchange, and we believe this is really carrying a very diverse strategies. We see that the market behavior has changed over the years. So if we look at this 15 years ago, it was predominantly a retail market. We started to see retail investors really becoming less compared to institutional investors. Currently, I think the ratio is like 60-40. And in most recent, I would say months, or the past 12 months, we started to see a lot of market makers / algos also coming to the market. So there is a change in the breakdown of the liquidity happening in the market, and Derayah is working to capture that market and launch a number of initiatives that will enable us to become active not only in the retail space but also active in other sides of institutional and algo trading side. With regard to your second question on derivatives, we believe derivatives market was launched a few years ago, or a couple of years ago, in Saudi Arabia, gradually, initially with the futures offering, then with the index options, and most recently single stock options. The market has not really picked any momentum, given, I think, one main factor is the absence of market makers within that space. And I think for the market makers to be active, they need to be able to hedge their positions and take other parts of the trading like short selling, etc., which is now underway. As this ecosystem is now completed, so the short selling, share lending becomes a normal part of the market. We think this will enable derivative writers to become active again on the market. Other question, Waleed?
Yes, we have Faisal bin Zar'a also have a question. Please go ahead.
For the call, I have two questions from my end. First one is about a potential change in the regulation regarding the interest you earn on the omnibus account, since I've heard that there are clients that may ask for that interest rather than Derayah keeping it. How could that impact Derayah financials going forward? My second question is about I've noticed some volatility in the cost to income ratio quarter to quarter, especially maybe in Q2 last year. There was a spike above 50% and then it normalized to around 40%. Could you elaborate on the volatility from that point and the outlook going forward? Thank you.
I'll answer the first question, and I'll ask Bilal to comment on the cost income ratio question. The regulatory framework in Saudi Arabia with regard to cash balances of customers until, I would say, third quarter of last year was a no. You cannot share any income you generate from these cash balances with customers, as the regulator perceived this as a competing with banking businesses, which we are. As CMIs, we are not licensed to do any banking activities. The regulation was updated in Q3 of last year, if I'm not mistaken. It gave a provision that allows for CMIs to share some of that interest earned if they elect to. So it's not really a mandatory that we have to share any interest generated. The market so far is not moving into that direction. And my personal view on this, that customers will look at the overall value they generate from the party they deal with, from a pricing perspective, from a product offering, from streaming services, etc., etc. They will not stop at interest rate generated from cash balances, which I believe will be a very small part, as clients do not really come to us, brokerage houses, to deposit money. They keep enough cash just to facilitate their trading activities, but not really using us as a saving account. Bilal, can you comment the cost income ratio?
May I follow up on just this point, if I may?
بنجاوب السؤال وبعدين you can follow up.
Okay. The reason for that was mainly certain reclassification of expenses provide with booking some provision and that specific period, that there was some one-off expenses related to certain actions we decided to take pre the IPO. That was the reason for it, and this is a one-off, not a recurring expenses.
Clear, and thank you for the clear answer. So the run rate is, as per the guidance, it's at about 40, which is achieved during 2024 and going forward too.
Absolutely, absolutely. As you know, during that time, it was the first time that we were submitting our file, and from a prudency point of view, we decided that any potential expenses that might be raising in the future or anything, we decided to take extra provisions on that specific period, in addition to certain costs related to certain consultants that are not related directly to the or not covered by the IPO proceeds. It was booked at Derayah's cost.
Clear. Thank you very much. Maybe circling back to my first question, if I may, just on the on that point, whose decision to ask for that interest? Is it the clients that should ask of Derayah to share that interest, or is it a service that Derayah does if they deposit?
The regulation basically gave the CMI the right to share. So it's really a call of the company to give or not.
So, I mean, I think it would be better for Derayah just to keep that money rather than share it.
The way we view this is an overall value that you give to your customers. If you decide to, for example, to increase the prices and give interest to customers, is that really a better value versus reducing your prices and keeping? I think that, to me, may be a much better value that the customers will extract from a trading company.
Thank you, Faisal, for your question.
Sorry.
Want to just take a couple more questions from the chat. We have Umar asking, what were the drivers on AUM's growth, and what portion of which has generated inorganically?
So we have witnessed a very strong growth within mainly our public funds. So we have launched a couple of funds in the equity space, in the in the money market space, and Sukuk, all of which have contributed positively to the growth for assets, plus the growth of the asset value that we're already managing in the equity side. So it's a mix of a new money and appreciation of value. The majority of that came from a fresh money.
Excellent. We have also one question asking, are we completely Sharia compliant on the core operations? If not, by when would receive this license?
To be honest, we cannot really comment on Sharia. We are no Sharia scholars here. What we can say that we are in the process of hiring a Sharia board for the company, which historically didn't have, and we'll keep the market informed once we move into that direction, and we'll make a public announcement about it.
There's also a question again on D360. What is the equity level of D360? STC recently injected 3 billion SAR in STC Bank. If similar injection is needed for D360, will Derayah prefer to stay away and dilute its equity, or will it also inject equity, and will it impact Derayah's payout ratio in the short term?
I believe the bank is in the investment phase, and all the signs that we see that it has been very well perceived by the market. If the bank requires, I think, further investments, Derayah should be more than happy to make that further investment.
One more question asking how much.
Just Walid, if you allow me.
Yeah, of course.
Regarding the question that will it affect the strategy Derayah has adopted regarding the dividend payout ratio going forward, to correct me, Abu Abdullah, I don't believe that will have an impact, because Derayah's above 99% of the income generated is a cash generated income. And what our strategy is or what we have been implemented so far, and what we have promised our investors, to continue distributing 60%. So I don't think, even though we will not dilute our share in T360, and we are, inshallah, able to continue paying the same dividend payout ratio.
Thank you, Bilal. Question from Saleh asking how much international represent of the total value of trades?
We have been asked this question a lot throughout the IPO process, and our position here that we provided a blended trading volume across all markets. We think this is a commercially sensitive information that we are not really sharing.
Okay. Then we have a question, has the perception of earning interest among Saudi consumers changed, or is it simply worded differently like profit, or does it need to be asset backed for it to be considered profit?
If the question refers to the interest income, it's really placed in a Sharia compliant instruments called Murabaha, and that's how we earn that interest for a major part of that cash balances.
Clear. Question from Muhammad asking, Derayah's broker ranking declined in recent months as per Tadawul's data. With respect to value traded, it ranked 3rd in full year 2024, 4th in January 2025, and 6th in February 2025. Do you see regaining of local market share in the months to come, and do you see increased competition?
We think we view this in a rolling basis, 12 months. The short-term monthly data can be always distracted by, some MSCI rebalancing, FTSE rebalancing, a major secondary transaction happening by one of the investment banks and its brokers. So we don't recommend looking at the monthly data to make an opinion on our market position, and this will be distracted by certain events. Having said that, Derayah is already, and we mentioned throughout this presentation, number of initiatives that we are working to expand our market share and capture a bigger market share. To summarize this again, the launch of an institutional trading desk, the launch of algo trading activity, all of this will contribute to Derayah's expanding its market share.
And if you allow me, Willie, just what he's talking about is the overall market share, not the online market share.
Right. And then we have one more question asking, do you plan on becoming a market maker for single stocks and options similar to Citadel Securities?
We think this is an interesting area. We rather really build the required technology behind it and gain the knowledge before we completely venture into that, which we are currently doing. We have mentioned that we have leased a space on the exchange, and we are in the process of launching this service with third parties. At a point of time where we have the knowledge and we have the know-how, we can do it ourselves as well.
There's a question on HFT. What's your view on HFT industry developing in KSA? What's Tadawul doing to bring in global market makers to KSA, or will they rely on local players to develop?
I think the recent what we have heard from the exchange that around 20 to 25% of the trading volume happening on the exchange are coming from high frequency traders. Derayah is fully aware of this development, and we have invested time and energy and money to be able to offer this service. We are in advanced stage of launching this. Late last year, we have leased a space, and hopefully before end of Q2, we will be offering this service to our partners.
Thank you very much. We'll take one last question. We have Sayed Akhtar asking, how do you perceive the increasing competitions from platforms like Awa'id and Saham, and what impact do these platforms have on Derayah's operation and market position?
We think it's good to see new players coming to the market. Historically, Derayah has been competing with the incumbents, all of which are bank affiliates. We started to see new fintech coming to the market and offering different ideas and driving also customers with a different value proposition. We think this is a very healthy competition, and we believe this is helping all to upraise their standards. We haven't really seen any significant impact in our operations from the entry of these new players.
Excellent. Well, I want to thank you, everyone, for your engagement and the earnings call. And obviously, I wanted to thank Derayah's management for taking the time to answer all of those questions. Once again, thank you so much for joining this call, and wish you a pleasant day. Thank you.
Thank you, everyone.
Thank you.
Thank you, everyone.
Recording stopped.
So it will become better with time.
So I need to post it in the
Ghaida, mute, please.
Ah.